So hello and welcome back to Green Pips FX. And on today's video, we're going to be talking about institutional trading from a smart money point of view. Now, before we get into the video, make sure you subscribe to our channel for daily updates and turn that bell button for notifications. And of course, if you do like the video, then don't forget to like the video. With that being said, guys, let's get into the content. So I'm going to be breaking down this pair here, USD Chef. So currently I'm on the 15-minute time frame. So firstly, we're just going to start from the hourly and see how price has been moving for the last couple of days, right? So we've been bullish on this pair for the last couple of weeks, ever since these breaks here, right? Where price has consistently been making high highs and high lows up until this area here, when price decided to break downwards and make this change of character to the downside. So this is where our bearish move started, right? So after the formation of this low, we were then expecting a lower low, a low high to be formed in these areas of supply right here, in which price came into perfectly, right? So we had a perfect mitigation of this imbalance here with this overall price action that made the mitigation into this area of supply, however inducing some liquidity above there. And then we had a further break of structure to the downside. Yet again, price did the same thing with the retracement into this area of supply, and then we had a third break of structure. So at this point, we're now sure we have three, first break, second break, third break, right? So we had 3 breaks to the downside. So we were now sure that our trend was, in a bearish trend, a strong bearish trend with 3 breaks, and not just a reaccumulation or redistribution schematic playing out. No, we were sure that the trend had changed, and then what we're doing is just seeking out to position ourselves and trade with the trend. So the next thing that I was looking at is the swing points, right? So we had a swing high and a swing low. So this is the range that we were currently sitting on, right? This high to this low. However, this low right here was my next liquidity run, right? So this is where smart money is going to target their money. All we had to do is apply the concept of supply and demand and find an area to which price was obviously going to retrace back into, make that mitigation, and once that mitigation was done, we could now witness a change and then a continuation in the lower time frames. So this is how we position ourselves as institutional traders. So that point of supply and demand for me was this overall area here. As we know how supply and demand or order blocks mean, right? So they simply mean, so in a downtrend, when you're looking for a bearish order block, then you're potentially going to be looking at the last buy before the overall sell, right? So this area here, this is the area that you want to see price retrace into, make that mitigation, and then push away from. So particularly that area for me was this little man in here. So this, from this wick to this high, which caused the final down push towards the formation of these lows. So that was my bearish order block or supply zone. But however, this is too much of a zone, right? And we know that smart money likes to create and take liquidity, just like what you can see up here. So I then refined it to the 15-minute chart because I'm a day trader, right? So I normally like to trade with the 15-minute and the 5-minute, especially for my entries. So this was my 15-minute mitigation. So this overall area here is the total hourly zone, right? So however, I'm just going to remove that and leave the mitigated portion of this zone, which is the last bullish candle before the overall bearish move. And that area, came to be mitigated with this wick here. Now, however, if I just go back a few points, right? If I just return this overall zone, right, you can see that this overall zone was mitigated with this wicks here. But however, this wicks acted, this swing high right here, it later on acted as liquidity and was taken out with this up push right here, this bullish push right here, leaving now the true mitigation, right there, right? So if anybody entered in these areas here or these areas here, then they probably had their stops where, right? So if someone had if someone had an entry in there, then they would have probably put their trades like this, and then their stops were simply right there. So this is just a liquidation move, right? So this is absorption of all this liquidity that's lying in here, right? These buy stops, these stop losses of sell traders who are looking to sell in these areas in here, they all have their stops in and around these areas here, just below this area of mitigated supply. So that's the importance of mitigation. However, you can avoid um, being trapped as liquidity every now and then. So there we are. So I'm just going to remove this and, remain with the portion of this, mitigated portion of this supply zone. So there we had our mitigation right here, and that's where our entry lied. So I'm just going to zoom in and show you how I take my trade. So right there. So we have the open of this candle. So we have the open of this candle here in between, and then we have its wick reaching above all the way up here for that mitigation. And then look at how this candle closes. So this candle comes back and closes below the high of this wick right here. So that's a triple M trade. So there we are. So just at this closure here, just at the open of the next 15-minute candle, that's my entry. My stop loss, however, is simply above this high of this wick, of this previous triple M wick. And of course, I'm looking to target the overall lows, right? So my take profit target is all the way down here at my next liquidity run. So this is how institutional trading is fun. So however, this video is mainly for breakdown purpose. All these concepts in here are taught at an in-depth and at an excellent level in our community, right? And if you do want to join, then all the instructions and the links are simply in the description below. However, it will be great if you join. You can get this pro level of knowledge, but of course, it's not. It is what it is. You can join, or you can just do whatever you want to do, man. And with that being said, so this was our trade. So I'm just gonna pull back this trade right here. Of course, so that's our trade, and we're looking to target these lows right here. Now, on the managed side, on the management part of this trade, right? So I normally like to manage my trades in terms of partials, right? So, in a minute, I'll show you why partials are important. So my first partial was at this low right here. My next one was at this low because we had a demand zone in here, and I was expecting a bullish push from here in towards maybe some areas of supply in here, and then a continuation to the downside to take out this high, right? So, however, this trade took out my first take profit target. I mean, my first partial and my second partial, and my overall take profit target was never hit at this point. But I had already taken 80% of the lot that I used off, so I was 80% in profit. And then look at what price does, right? So price comes in all the way back and takes me out at break even at this point here. So this is why trade management is very important, because if you're simply a trader who allows his trade, to run all the way down to this point here without taking anything and then letting it come back and take you at break even or with a loss, then that's a very stupid point of view in trading. So, this is why partials are very important, because price can run all the way almost to your take profit target and then reverse to take you out break even. However, you cannot anticipate these things until they already happen. That's when you know what's happening. So that's the importance of taking partials along the way. Now, from that, I'm going to show you now the next trade that we took off of this area here. So this trade ended up at break even with 80% already taken. Now, look at what happened, right? So we're going to dive into the internal price action. So we had a low, a high, a higher low, high, high, higher low, high, high, higher low, high, high, right? Okay, so this is the high, high that took us out at break even, but notice where it is, right? It's still in our S&D zone. So after the formation of this high, price forms a high and then an instant break to the downside. What does this mean, right? So this just means price came back to take some more liquidity and gain momentum to come and take out this low here. So we are still in a very strong bearish trend, right? Whenever you see this schematic right here, just notice that you're in a very strong bearish trend. And the next thing that we looked for is, of course, the same thing, right? So we just looked for the last up push before the overall down move started, which is this little guy here that we call an S&D zone, from which we anticipate that price is going to retrace into and then push away from to target the overall lows. So that area in particular for me was this area here. Now, as you can see, price comes in again with the wick. So we're just going to zoom in here, right? So notice how this wick goes, right? So the candle opens here, the wick goes all the way up here for the mitigation, and then comes back and closes below the high of this previous wick. So again, that's what it's a triple M entry, right? So at the close, at the open of the next candle right here, that's where my trade lied. My stop loss is simply above the high of the previous wick, and of course the same criteria. The same criteria are to be applied. So of course we target the lows as usual to make it a 1 to 11 RR trade. And however, that trade, that trade played out perfectly. So there we are. Take profit target being hit, and 11 RR was collected from here. Now, with that being said, guys, I hope you did find the video very informative to you. And of course, if you are looking for a place to extend your trading knowledge, your trading skills, and achieve success and profitability in your trading career, then the Green Pips FX community is exactly what you're looking for. All the details and the descriptions and the links are below. With that being said, I hope you did enjoy the video. If you did, then don't forget to like, subscribe if you haven't, turn that bell button on for notifications. And until the next one, guys, stay safe. Have a nice trading week.